What I wanted to do right now, besides the organizational change today, is to show you what happened yesterday. We should do a recap. Let's just split this off here. We should do a recap what happened yesterday, and maybe it is really new to you or might be new to you, and we will discuss it in the next 1-2 hours a little bit more intensively. Is that you learned that Bookmap and especially TradeFinder is an excellent approach to fine-tune your trades to get the best risk-reward ratio. We have discussed the volume spike, sweeps, absorption, icebergs, and the liquidities concept of the market. At the first day, and that's again important, I think is I know is to have a look at the auction and understand how prices are made. It doesn't matter whether we are on the exchange here or if we are or we are buying anything else. It doesn't matter what. We need to have liquidity. There must be a person, an individual who is willing to sell something to us or to buy something from us. That's a normal principle. That's really nothing special. But I think and I believe that we should keep in mind that at the exchanges we have exchanges we have the same mechanism, and this mechanism can help us to understand what the market is doing, who is leading, are the buyers leading or are the sellers leading, how they are hitting the bid. Is there a certain support on bid, for example? That might be indifferent, that might be high liquidity, that might be, as well as we discussed yesterday, icebergs who are trying to support by higher volume or higher liquidity a certain price level, or on the ask side where we can see the resistance, liquidity resting on ask, for example, and resisting the market and trying to bring to a break or halt, and then pull back the market back or pushing the market back. Yes, Christoph, I can do so for the Ninja Trader. And then we discussed the options, and my comprehensive view of the market is, I'm like the word holistic, is that we just not have a look at a certain chart with what chart not on certain chart, and as well the indicators, what we have installed and what we are watching, but we should have at least an overview of the overall I'm a little bit down. It's a little bit hard today. I don't know why. The overall market. It means by that saying that, I mean that we should have an understanding, even a very a good overview about the markets, about option market maker who are driving the market, about the hedge funds, and what happens on the left and right side of us in the market. That's my approach to show you that, and we discussed, for example, for the ES, and as well I will add, when I have a little bit more time, the same structure for the NQ, because we have the QQQ for the NQ, and we have SPY. We should look we have the tools like from Spot Gamma, the Gamma levels. We have the tools which are for free, the institutional levels I'm providing nearly every day when I'm around. Then we have the volatilities. You remember, the option maker must keep the exposure not low but at zero, and they have to sell, and they had to hedge their positions. We have the gamma. Gamma is when delta is the speed, then the gamma is the acceleration in the options market. We have the Warner, which is the volatility. the implied volatility of the market, and we have the charm, which is the time. So we talked about that the options expire at around mid of month mid, around 15, 16 or so something like that, and then the market is on its own for several days until the options are again interacting with the market. And mostly, and that's the point, maybe to what I wanted to say with the introduction of the electronic traded markets, the E-mini, which was 97, is simply to give us the opportunity to trade with a low budget, with the low budget these markets as well. And nowadays we have the micros, as well. So that was the overview, and then we started to dive in a little bit more after this, the understanding of the brief introduction. It's really a really short and brief introduction into options. Then to understand that we can see gamma, which is, or the institution levels, which worked perfectly yesterday. That we see that we have static information about the market, and we have live or vivid actual information of the market based on the SPY. You see that in front of you see it on the screen I'm sharing here. We see you have the SPY, you have the VIX, that's the volatility index. We have the VXX, which is the ETF UVXY, which is the stock or ETN, and then HYG, which is the high yield bond for the high yield corporations. And all this mixture gives us an excellent overview of the status of the market state and what the market is likely to go to do. And we will discuss that. Welcome, David. Welcome, Argo. Hi, Alexander. Welcome back to our session here today. I mentioned we have an organizational change. I have to leave at 12 p.m. Eastern time. That means 6 p.m. I have an important appointment. I can't miss today here. So, but we will tomorrow be together all the day. And trading. We have still a little bit to go with the theoretical explanations of the minor entries. We will have a look at. And I'm just talking about what we have, a recap. It's a short recap about what we have discussed the last 2 days, so Monday and Tuesday. And that might be exciting. It might be unbelievable for you that institutional levels are working maybe 80% of the time. You can check that every day. You can make your stats about them and what they are representing. And it might be even unbelievable that you can have a simple chart and understanding the market direction without struggling with any explanations. There's a green bubble, there's an iceberg, there's a stop run, whatever. You don't need it at the first. You should simply understand what the market is doing and where the market is heading. And when we discussed that yesterday evening before we closed the session, the market was in the state, and I think I mentioned that this move up. I hope you can see my screen. You can understand everything I'm saying here. Yeah. Okay. Great. So just give me an Y. Okay. Good. Hope everyone is on board here. I'm excuse me, I need a little bit more adrenaline today to come into this into the topics here, into the subject. You remember that we talked yesterday about this move. So when we talked about VIX, VXX, UVXY, and HYG, then you see you see a divergence here. So the VIX is dropping, the VX-axis dropping, and the VXY as well as was dropping here in yesterday's chart. Then the market was simply not the market showed strength today. Yesterday. The market shows strength today. It doesn't matter what the volatility index did here at that time. It was 7 my time. It was 1:10 p.m. Eastern time here. It doesn't matter what the volatility index did. The market went up, but very slowly. You remember that I tried to annotate and showed you that the market trades at different, or can trade on trades, not can, but as well trades on different with different speeds. That means very high here. Disregard this. Just let me clear. Okay. This speed is very high. It goes for a certain time. You see, this is the time axis here. It goes very, very fast. It's not 90% here like on sweep. Like a sweep is always a 90% move, and that implicates that the market is really strong here. So, and the volatility drops. That's the point. But you see what happens then after this exhaustion at these points here. Market started to grind up very, very slowly. So when we compare the time the market needed to trade from here to here is a total different time than the market needed to trade took to trade from here to here. That's a completely different picture. And the interesting point, though, I said, and that was, I think I left. Yeah, I left this price alert lines on my chart here. I left them on. So that was this situation where we got a volume spike here. It wasn't a sweep, but a volume spike with high traded volume. And absorption, of course, here, that was really a warning sign. So the first warning sign. But anyway, it is hard if you're shorted here, then it might give you a few ticks back. But my experience is that when that happens, the pullback happens a certain time later. The pullback happens a certain time later. When we don't know, but we can say, okay, that's liquidity. And in this case, the institutional level was perfect at 47.10, and the price or the ES traded back into the next level, 05. But the most important, what I just wanted to discuss with you right now, to recap is, you see what happened at 3:30 Eastern time, half an hour before the close. You see what happened? Can you comment on that? You can use your microphones, ladies and gentlemen, so don't be shy. Use your microphones. Or write in the chat. You see my screen. You see my screen here. Let me annotate that as well. What I mean is this point here, that level. What does this mean? Wick started to go up, yes. And what does it mean? You see what happens here, and that's we will learn that. You will see that. I simply want to encourage you to use this chart. What happens when, I mean, that's hindsight. Not right now, of course, that's hindsight. But you see what happens here in the ES. The ES started to trade higher. Let me show you that on chart. That was this event here. So we saw the pullback at 10, and then it went back to 01, and then that was started higher. So the next assumption might be for some of you saying, okay, we reached the pullback. The next level should be as well here 05, maybe even 47.10, and going up. But suddenly, when we are just thinking, okay, this is a really bullish, strong market, suddenly that happens. The wick started to rise, to climb. Yes, David, thank you very much. That's the point. You will notice that. You will notice that every single day when the market opens. See another. Let's discuss or see another example here. Today happened right today. Clear our drawings. Okay. Pre-session. I don't know whether I can overlay this. Oh, we are not open. Okay, good. Market opens in 2 minutes. So let's discuss this before the market opens, because then it will be hard to see at the beginning. You see, that was the same time at 1:30 my time, 1:30 my time here, roughly. You see what happens. You see that that's another chart I'm watching. That's the ADD, the broader market index. That's the tick, and that's the SPX cash market here. And what I have on just a simple another, without any indicators. I don't like to have any indicators here, because I will talk about the suggestion I have to you, a motivation to you, I have to you, just to delete all indicators on this chart. Just watch what happens here with the VIX at 1:30, 1:40 my time here in the pre-session. What is the meaning here of where I hope you see my screen and where my cursor is. What happened here? Wick started to rise. The candles are green, yeah? Guys, use your microphones. Don't be shy. Discuss with me. It's all. This is really something invaluable, because when you see that, you go to your bookmap chart and you see starting this market breaking down or trading lower here.
Oh, it's have to go up for the ES to fall.
Yeah.
So I've noticed small amounts have no impact.
Yes, say it, Chris. Can you say it again, please?
How much does the VIX have to go up for the ES to fall? Because I've noticed small movements have no impact on the ES.
No. When it starts to trend, then we will talk about the minor or the finer entries today in the book map. When it starts to trend, be sure that the market here, the ES, maybe as well the in Q, but I can't comment on the Q right now. When the market starts to trend, you will see that the breakdown, that the ES breaks down. It goes lower than 96. You see liquidity at 92 and you see liquidity at 90. And this move, this up move, becomes stronger and stronger and stronger. And that means you can't buy that at the moment and at this moment until the WIX retraces or the WIX comes to a stop. Yes, the point is what I wanted to see. We should develop a major view of the market and a minor view on the market. That means by minor I'm talking about how to find the sweet spots, how to find the entries in the market. That's the one point. But with what I'm wanting to stress here is simply to watch the VIX for S&P, and I'm sure it's as well valid for the NQ and as well valid for the Russell. That means that the VIX is rising, and you will see that the ES is falling or dropping here. How much? It's hard to say, but we see that in this case, where you see this green candles here, Chris, we can't buy, we can't go against this market right now, because it's more, it shows us, it directs us to say, okay, the market will drop, and it dropped very hard. You see that, you will see that when you, I will motivate you to do, to rehearse that next week. Give me a few minutes, then we will talk about that. And that brought the ES in the pre-session down here. You see, there is no quantification of VIX must rise 1 point, 10, or 1 point, or half a point, on whatever. There, I didn't any quantification of how much must the VIX rise in order to bring an ES down. So I can't say that, but you see what happens here. That's the open. You don't need any other chart. You don't need any other chart, and we will rehearse that in. I hope so. I can motivate you to do that so in a few minutes, and we will do that tomorrow as well. David.
Hey Walter, if I look at the blue lines there, the start of your blue line yesterday.
Yeah.
The VIX was also rising, but the market still kept on grinding higher. So
yeah, that happens, and yes, exactly, and that's what I'm. Who was that? Who? Eve. Oh, so thank you, Eve. Yes, that's correct, but that's a divergence. Be alerted. Yes, I think maybe you know that, but I'm just saying that. So in this case, this is a divergence. When that happens, I'm totally alerted. Every red light, alarm signal, alarm sound goes on here in my brain and saying, okay, be very careful with the long positions here. When we see this actions here and the market starts to rise, or the S&P is going grinding up or trading up in this case, then you see VIX is rising. Be cautious with long positions. We will talk about the finer and minor entries, but that's a warning sign, guys. That's a warning sign. Every divergence you see in the volatility indexes is a warning sign. And as well, we talked about, and that's what I highly recommend. Let me find here. Where is my? You can use either the VXX. I like the UV, and you see, it's very clear. I don't need to see the ES chart right now. I don't need to see or watch the ES chart. I know from the beginning on that was a sell. Let me see if I'm right. Yeah. We see what is this, an absorption here, a very high absorption at 94. And then, excuse me, that's the chart. That's simply a sell. You have to sell ES. Can you show? Can you show all divergences on this chart? Which chart? I'm lost a little bit. Maybe here on this VIX chart I have here in front of myself, in front of me here. Yes, I can show you divergences. Look here, that's the nice one. Maybe that was what we talked about, where the question raised or came up, whether we can predict the down move here. Christoph, I watched this. Give me some seconds. Give me some seconds. Don't rely on indicators. Just watch and learn You don't need any indicators. I promise you, you don't need indicators. And divergence is here. Look here. That was, who was this?
Remo, I guess.
Divergences.
Remo, I guess.
Myron, can you show all divergences? I lost it. Myron asked, can you show all divergences on this chart? Yes. Look here. SPY dropped, or S&P dropped very hard here. Okay. Came back to the same price here. Okay. We don't see any significant changes in the VIX. And then it retested the low here of 466 again. But then, watch what happens. That's a divergence. It's not, the line is not perfect. Don't mind the line. The line is not perfect, but you see the divergence here. You see what happens in the VIX. It touched 2 times 1746, the second time 1746, and the third time it traded lower at 1737. That's a divergence, guys. And if you don't see that, if you don't want to go, or if you don't see that in the SPY, then wait until the VIX starts to drop. That's a divergence here. A very nice divergence. HYG is a little bit hard to read. As I said, it's extremely slow. But when the HYG rises, then you can say the ES on SPY, and others will rise too. Good. That's a divergence. Let's see if we can find another one. That was a divergence too on HYG. Yeah, that was not really not a spectacular one, but anyway, if you see that, you are trading from 47.25 to 466.38, maybe 5, 6, 7 points. I don't know, maybe even 10 points here. That was a divergence. Divergence in the VIX. It was that day was not so obvious, but you see it started to fall from the beginning on. It started to drop. The VIX, the VXX, and the UVXY started to drop. You see divergences here, and as well, that's a nice, another very nice divergence here. You see there the relief in the volatility here. The relief in the volatility here. Stay in draw mode, okay. That's a divergence, ladies and gentlemen, what I'm talking about here. That's a divergence, a very, very nice. So the ES, in this case, as well as the SPY, retested the bottom here, 64, whatever it is. You see that on my chart. But what happens in the volatility index, it starts to decline. It starts to decline. It goes down. My intention as well here, HYG is going up. My intention and what I would like to achieve with you and give you the material and the tools and the ideas on your hand is to understand then this market relies on the options market makers, on the big markets where the prices are really relevant and where they are hedging. When they are hedging, they are not hedging 500 contracts, they are not hedging 3,000 contracts, they are not hedging 10,000 contracts, they are hedging 500 millions. Yes, I'm following, as you know, some other guys, option guys like Cem Carson and Perfiliev and other ones, because this is an extremely important part of, or should become an extremely important part for our trading here. And Alexander Perfiliev wrote, for example, I quote him in of one of his, I think it was even on Twitter, I'm not sure, but anyway, there was a big trade under the surface, and that was a so-called options Siegel spread trade. So far I know, let me see, that Siegel option strategy was it. And just to mention one point what we are talking about, to give you the dimension of what we are should expect and what we see in the market. I quote Mr. Perfiliev is, for example, if that means to delta hedge, he's talking about delta hedging. For example, if SPX rises plus 1%, so if the price of the SPX rises plus 1%, the funds delta on this trade will move from minus 0.60 to minus 0.63. That means 0.03 points. And the dealers will need to sell that extra 0.03 points of SPX delta to remain delta neutral. In dollar terms, and that's important what I wanted to say. In dollar terms, it means they need to sell. Let me just text that here on the chart. Just in dollar terms, they need to sell. Give me a second to visualize that here. Given the price of the index is 434, the current spot price is 4,340 by multiplied by 45,000. That means just a moment. Okay, so that is the amount of money they must hedge when the index, the price of the index, which was at in this example 4,340, goes up for 1% move. They must sell 585 million, and you can imagine right now what dimensions we are talking here when we see the big hedge funds and big institutions, big banks trying to keep the exposure to zero. That's really big numbers. We can't do that in the ES, in the E-mini, in the electronic markets. It's not possible. Therefore, keep in mind that the gamma is the acceleration of delta. We have the implied volatility. This is simply what we can measure, what we can see actually. And we have, I'm added this high yield bond because it's quite interesting to watch it. These are really the world. This is the environment where we are in as traders, and we must keep that in mind when we are trading. We should not just focus ourselves, and I will talk a little bit about that, on a single indicator or on an iceberg, for example, on whatever you might have on your chart or whatever you have maybe learned. We should keep the big picture in our head and understand what the market is, what the influences in the markets are, to see the bigger picture. And when we see this what I'm just trying to demonstrate you or to show you here, let me clear that. No. We'll put this aside here. When you understand this big picture, then you won't look here, okay, that might be a stop run, that might be an iceberg, that might be a sweep, that might be whatever, because you see, okay, the market is really ready to lift off. That's the point here. The market is ready to lift off. It's the next discussion we must have today is what are the minors? How can we see where to enter the market? That's the point, to keep our risk-reward ratio or risk low, and the ratio to the highest point, or to the biggest gain we can get. It's quite it's not easy to manage that, but that's what we have to learn. Maybe there was a liquidity as well here in the ES. I don't know. Could be that we have a support at this level here in the ES, and then. That might be a good sign for us. Okay, we see the market, the VIX is dropping, the VXX is dropping, and as well the UV is dropping. Let me have a look. Just a moment. Clear mouse. Okay. That's the UV, and now I bet because I'm not sure what happens right now, but I bet the ES is trading higher here. We see a very fast down move, and we see the liquidity here as well. The same principle, it applies. The principle we discussed this week applies to every single market. There is no exception. Yes, the ES dropped down very fast, and then now it's trading up. We have a possible target at 1524 here. If the market trades 1524, if the UV trades into 1524 here, that means that the volatility index will rise and the ES will drop down. That's the next assumption, or that's a valid assumption we know, because liquidity is there. Liquidity is a magnet, or acts as a magnet. Let's see the ES right now. Yeah.
Walter, one question.
Yes, go ahead.
Go back to UVXY, please. Okay. This is more of my this amazement or whatever based upon our liquidity theory. The red line at 1525 is attracting UV, and that is inversely correlated with our SPs and other things,
yes,
based upon the wonderful teaching you just did, right?
Yes.
That's great. So, but how that liquidity is, because this liquidity is local to UV, but that it is linked to the SPY. So, what amazes me is how these two are so correlated so tightly, UVs and SPs. Just because of a liquidity here can create that much of impact. We're just talking of liquidity at a UV level, right?
Yeah. Every market, you can't. I think, at least I can't say that you can relate this liquidity directly to the ES, because volatility indexes are a separate trading, separate trading places.
Instruments. Yeah, they're different instruments.
Yeah, they're different.
There are people who just trade.
Totally. Yes, absolutely. And I would say those who are, at least for my point of view, who are trading VIX. You see how they are pushing the price up here. You see the absolute liquidity came up. It supports the price, and it's most likely that the UV is going up to trade into 1525, the next 1550. That's our first map. When we are looking at a map, our trading map, then we see, okay, we have to drive. Excuse me. Please mute yourself. That's a little bit too much noise here. So when we look at a map, let's see, that's a map. So we don't have Google Maps, and we don't have other help tools like 20 years ago. We have only the paper map. You open the map, and then say, okay, straight ahead, there's the building I want to go to, or I want to drive to, and that's here. We see this is the first target. We see. there's no, Srini, there's no guarantee whatsoever that this market is or will go trade into 1525 and 1526. In this case, it was. In this case, it was. It is a wonderful example how we can read a market this way today. It's easy. It's easy money what you can do today based on that knowledge. It doesn't matter what
exactly.
it doesn't. Excuse me. It doesn't matter whether you see thousands of icebergs here. It doesn't matter because you see what the volatility is doing and the volatility indexes. The VIX future is extremely slow. You can add it to your chart. I didn't add it to the chart here, but it doesn't matter. You rely on the VXX. Let me have a look here. Here, the VXX, the same picture or very similar picture. I recommend a UV, and then let's go back here.
Yeah, what I was trying to interrupt you is if you would have placed ES right next to that UV while you were speaking a minute ago, it's just straightforward. UV is just eating the top parts of liquidity, and here bottom ES is just moving down.
Yeah,
you can just see.
Yeah, I don't need at least I myself, and I'm sure if you are willing to following my advice, you wouldn't need any other indicators. It might sound ridiculous what I'm saying for you, because we are aligning or we are relying on indicators and charts and whatever. But if you watch simply this chart here, you don't need any indicators. You really won't need any indicators. That might be very I will provoke you in a few minutes about this, just to talk about how to learn this magic. But guys, it's nothing magical here, really. I just show you the connections between these markets, and you can rely on them. Just if you either you have Bookmap, then you should have the UV or VXX or VIX future. Doesn't matter what you want to have. I suggest to having them, to having the both. Oh yeah, I'm here in the just a second. I was a little bit confused here. So going back, so that's the picture you see. That's the picture you see at the beginning. VIX dropped. No, excuse me. Has risen very, very strong here. Dropped a little bit and is starting to rise again. Let me see what's in here, guys. Myron, try to find. Just give me a second. Find divergency, spine, VIX. Yeah, no, I will show you that. Seems to work in good market bias. Great stuff. Option flow. This is a perfect tool as well. Yes, no, it's Black Friday. Blah blah. Okay, just telling. Using for confidence, we can have a look at that. Okay. Argo, be in mind, volatility instruments are mostly hedging instruments, spot and through options. Yes, that's important. That's important. But that makes this instrument so important. I'm not saying, and that is quite important to understand. I'm not saying that we should wait and watch every single bar here. You look at that. This is a green bar. That means. Okay, the market the volatility must go up, and that means the S&P must go down. I'm not saying to watch every single market, but we should find anomalies in the market. We should find pattern in the market where we can rely on saying, okay, the market is prone to drop here. There's nothing that is to discuss because at the beginning the volatility was high. The volatility rises. Rose to from begin on from the start of the session, and then made a break, and then started to rise again. I mean, this is hindsight, and it is not possible. And I think Srini, you have been who said that there's nothing. The markets are not. They're not preceding each other. That means no of this market is preceding the other market, so that we can say when the SPY falls or when the QQQ falls, is trading trades lower, that we can say, okay, now the ES is somewhere in a state where we have enough time to enter the market. No, this is, everything is in sync in time. We can't say if this small bar is rising, then the ES will, or SPY will do then something different. We have to watch the pattern. We have to understand, to watch, observe, and then you will get it. You don't need any single indicator and any single cent to spend to understand this system. That's the beauty of the system, well, once you understand it. Yes, volatility, as I mentioned yesterday, therefore I talked very briefly about options to understand. We have gamma, which could be a part of your trading if you are following spot gamma. If you are using my or that what I'm receiving from the institution, the institutional levels, they are more precisely than the spot gamma levels, but they are static. We will talk about a little bit later, but they are static. They are showing maybe the price is going up and then the line becomes resistance or turns into support and vice versa. That's the one point. But what's really moving and shaking the markets, these are the volatility. This is the implied volatility where the big market makers are doing their job. That's the point why I'm stressing this here. Walter, do you use trend lines on ES or no? No, I don't know. I don't know. I mean, I have them in mind. I have them in mind. So I see the trend lines here, but I don't use them. I just, I'm a simple man. I'm a simple man. I just want to make some bucks. Then I'm closing my PC and enjoying my life. That's my goal. What is your Discord channel where you post the insert? This is on Discord, TTW Trader on Discord. I have a wonderful family. The life is so short, guy. The time is so fast. Look, we started on Monday. Now we have Wednesday, and I feel we started. I feel the time, at least on from my perception, is simply flying, and I don't want to be around here 8-10 hours in front of my screen and watching what the ES is doing. No, that's not the point. I just want to show you that there are really exciting and high profitable opportunities in the market when you understand how to connect these puzzle pieces together.
Hey Walter, would it be fair to say if you watch or monitor the correlation between ES and the VIX indexes, that if you are in a positive correlation, that you have to be aware that there could be a bottom or a top in?
Yeah, positive. What means positive? They are in
positive correlation, that they go in the same direction.
Okay, yeah, that's a warning sign. Absolute, yeah. To me, that's a warning sign. That what happens yesterday. We discussed that. That was I think it was this move here. Yes, that was a positive correlation, as I think if what you mentioned here. That is a positive.
So there is then also a way to spot divergences, I guess.
Yes, that's a positive correlation, and that's really unusual. And that was the top at 10, and the top was in the ES exactly at 47.10, where the institution level was, and then yes, it traded back. 1 point more. 1 point to yesterday's discussion on sweeps. Do you remember, guys? Do you remember that we have had? We talked about the sweeps, and we saw, I think, 2 or 3 sweeps where a player was selling, I think 2,000 or something like 2,000, 2,500 contracts actively. Not sure whether it was 2,000, but let's say 2,000 contracts. There was a player at, I believe it was 90, 46.90. No, I don't have any icebergs on chart because I'm I'm yes, Chris, I don't know how that matters now for this discussion, but you see all the icebergs in the dynamic plot, but I want just see 300. I'm just filtering 300. I don't want to see the big one. I don't want to. I'm not interested in 10, 20, and 50 icebergs here. But anyway, just aside. Okay, come back to that what we have discussed before. Do you remember that we have talked about sweeps yesterday? And let me go back. Let me go back on my chart. I have 5 days, 6 days of historical data here.
I believe, Walter, I believe it was 3,000 sweep.
Yeah.
And then it was 1,200 got consumed in one.
Yeah. I don't see them right here because I'm starting my bookmap every day from scratch. But I think that we saw sweeps around 90 here. There have been several sweeps here, right? Can you remember that? Tom, thank you. And that we discussed about the sweeps, what the sweeps are. This is a single order ID. We can find a single order ID. This is an algo-driven mechanism. He wants to catch 3,000 in a row. If he get the 3,000, if not, then he take what he get, and then he passively cover his remaining positions. Then that's really interesting to watch. But we are talking about 3,000. Let's say 3,000. There was a guy who was selling 3,000. And so far I know, I was not concentrated at the end of the session. As far I know, there haven't been any 3,000 icebergs covering. Oh yes, I'm not sure. I'm not any big icebergs covering at the end. Most of the time, if someone is selling, let me say 3,000, you will see a covering of 3,000, 1,000, 1,500, 500, 2,000 at the end of the day. I haven't seen them, but I must admit I haven't watched it actively. So maybe something is I'm missing something here. So not sure about that. Anyway, I think there haven't been any sign. So there was a guy who sold at 47.90. 3,000 contracts, and what happened? The market went up against him 20 points. 10? Yes, nearly 20 points against him. That's ridiculous, or that's something we never want to make here, never want to trade when a trade goes 20 points against us. So keep as well this in mind, that there might be really big players in the market, and they are not concerned about going the market against him for 10 or 20 points. Maybe he expected, and that's speculation, maybe he expected that the market will drop further. And if he is selling, maybe we'll sell some big icebergs, or see some big icebergs today here. Maybe we will see big icebergs today here. 3,000 or 2,000 or whatever, that might happen. And that might be a sign as well that when the big players are positioning themselves, watch which side they are selling into, which side they are selling into sweep, a sell sweep or a buy sweep. So that's just to accomplish the discussion of sweeps here, which we had yesterday.
One question though, do we have any kind of indication of the sweeps and icebergs that were there coverings, exits, or entering to the market?
Yes, we have indications in the Trade Finder here. It's an excellent instrument, guys. I will promote. In fact, that's the best instrument, the best add-on for Bookmap you can have. The sweeps, I'm sure you have been around yesterday, and the sweeps are excellently analyzed by the Trade Finder, and it shows you exactly what is traded and how much was covered by this algo. A sweep is as well in our philosophy of trading philosophy a stop run. I don't have a good example right now here, but we might see some examples along the day or maybe tomorrow.
Oh yeah, I remember that there was like
what I wanted to say, just I'm not sure, ladies and gentlemen, I'm not sure whether, dear colleagues, whether we have had a covering here at the end of the day yesterday. I'm not sure about that. That was the 7. No, that was here. It might be, but I don't know. So I'm not sure if there was a covering. So, but I don't believe that because we ended up in 96. The close was 97, I think. Yesterday's settlement was 96, 97, and he was short 90. So let's discuss it more theoretically and see if the market drops further down here, maybe into 70, 80, 70, 50. The institutional levels indicates a low of 60 or 60-ish area. If it's going down, then you can imagine he was selling 90, 2,000 contracts or 3,000 contracts, whatever, at 90, and then he might cover at 60 or something. And you can do the math what his earnings or gains are in this game here. Okay, guys, that was a great day yesterday based on that, and I see you a little bit more reluctant, and I see what I feel is that you need indicators. Give me a little bit more motivation for you. Just a moment. Yeah, this is a discussion as well. In your documentation, I have put 2 screenshots about or of. There's a very nice look here on the right side, on the right chart in your documentation. You see the divergence here. If the market goes down and touches the double, or yes, this price, that means this is a double bottom here. You have a wonderful entry signal. It doesn't matter whether this is an iceberg and sweep or whatever. Doesn't matter. Ignore it, because it's simply a buy. It's a buy. Nothing else but a buy. This is as well what I'm saying to everyone and to you is, with this knowledge you can improve your success rate and your probability greater or higher than 50%. You can be 60% right all the time when you understand, without any indicators, without spending tons of money, what the market is doing for the ES. I'm talking about the ES. I think the same I will apply to the NQ. In case you are Myron, you are trading NQ. You will see the same behavior. I have after the seminar, I will have a closer look into NQ as well, and maybe add it to this the documentation as well for you as an update to have an idea. Okay, guys, knowing that, now it comes the motivation. Yes, Frank, great. But what I just, please be focused and be concentrated for the next, let me say 10 minutes, okay? Because what I want to say now and what I just want to point you might be a little bit more strange. This is not a part of your documentation. I did an update tonight or this night because as always when I'm sleeping I've got the best ideas. And I added 2 slides to the documentation. I will update it and you will get